right. Hello, everyone. We've got a full house here for blockchain tokenization and secondaries, the future of the private capital markets. So exciting lunch panel for you guys today. We have a stacked panel of influencers in the US crypto space. We're excited to present to you the DealMaker community. Now, I've spent a bunch of time diving into the space and what it means for DealMaker and you guys, our clients and partners, with a huge benefit of the insights of Troy and Michael. And that's why we're excited to share this with all of you today. Before we jump into the discussion, a quick disclaimer: nothing you're going to hear today is financial advice. Nothing is the opinions of DealMaker or the entities represented, et cetera, et cetera. So before we hop into the chat, I want to tell you a little bit about the crew that we have here, who they are, and why I wanted them to speak to you today. First, Congressman Warren Davidson, a man that needs no introduction. Congressman Warren Davidson is a former military West Point man, now representing Ohio's 8th District. He's a member of the House Financial Services Committee and one of, if not the key player, pushing forwards Congress's crypto talks. Then we have Michael Hiles. He has a long history in technology, taking him across the US as a CTO, executive consultant, and mentor. He was managing director at the Founders Institute, which, for those of you that may not know, is a key institution, in my opinion, that developed a lot of the startup templates that I even used in my legal practice back in the day. He spends time investing and mentoring in the crypto space, and he's currently the founder and CEO of 10xTX, which is one of our partners at DealMaker. They specialize in delivering distributed ledger technology and enterprise-grade blockchain development. Finally, to round out the panel, we have Troy Vanderburg. Troy has a long background in the finance industry. He's a former investment advisor, spent a bunch of time in the mutual fund space. And so he brings a really unique perspective to the conversation from that finance background lens. He founded Slide Ventures, a micro VC, and he now spends his time investing as well as being the chief revenue officer of 10xTX. All right, so you guys didn't come here to listen to me talk. First, to kick it off, Congressman Davidson, as a blockchain and cryptocurrency become more ingrained in pop culture these days, we're seeing a lot of people showing interest in the sector and asking questions. You've been active and vocal in the space for a long time. How did you get started? How did you get introduced to blockchain? And how has your understanding of it changed over time?
Yeah, thanks for the question. I mean, I personally first got involved, became aware of Bitcoin in 2013. I had been in manufacturing. So after I got out of the Army in 2000, I got into manufacturing. And, due to the nature of manufacturing, that's involved a lot of international payments. And, the traditional wire Swift code transactions with wire transfers took a lot of time. Apologize, I'm at a school, so there will be loud beeps and buzzes that will disrupt my train of thought and comments. So anyway, along the way, I was doing that, and periodically, you would say there has to be a smarter way to do transactions internationally, and a faster way to do it. And as digital technology went there, it took a while for money to really be truly digital, especially across borders. And so there were early things like DigiCash and eGold, and then the 08-09 financial crisis happened, and I kind of just was focused on survival and then growth coming out of the recession, and heard about Bitcoin. I guess felt late in 2013, and now you look at it and say it's still probably early for a lot of folks. So since that time, the number of use cases has propagated, pretty dramatically, because the underlying technology, true distributed ledger blockchain technology, has inspired lots of innovation and frankly some bad stuff too. And then when I got elected to Congress in 2016, no one in Congress was really doing the work in terms of oversight. In 16 and 17, the ICO market was really hot, and since then there's still been a ton of things that most people would look at and say it's really just a pump and dump scam. But a lot of people have made a lot of money along the way doing them. What's not focused on is a bunch of people lost some money that transferred that to the people that made a lot. So the SEC has been slow to provide clarity. So in 2018, we put a framework together that came from talking to the people that wanted to be legitimate players in the industry, including Michael and 10XTX folks who came to the Library of Congress and said, hey, what we really need is a clear definition of what is and what is not a security, which would benefit the innovators in the space, the investors in the space, and frankly, the regulators, because as we've seen, the regulators themselves, their own views shift depending on which regulatory chair they're sitting in. So anyway, that's kind of the cliff notes of how I got into this.
Yeah, and so much of that I want to dive into. Thanks. That's a great overview. Michael, you've been in tech for so long. How did you end up really focusing on blockchain?
So having had a background in tech prior to blockchain and, seeing the various industry cycles as they've come and gone through the history of computing, I saw very early on that the use of a distributed ledger could be applied to a lot of different things, not just units of account and, sending Bitcoin back and forth, but literally applying the technology in particular to the regulatory space. Spent a lot of time in GovTech, and so understood on the government side of the fence how systems operate, and really recognized those corollaries early on, and saw the opportunity to really define a exciting future for capital markets and finance in particular, and exploring the decentralization of legacy institutions, and bringing efficiencies to the winners that embrace the innovation and the digital transformation that's already underway.
Yeah, for sure. And Troy, what about you? Why did you focus on this space?
Yeah, I think this goes for me back to conversations with Michael 3 or 4 years ago. I came out of a distribution company, alternative investment distribution, that I had out of New York City. And it has been a goal of mine. And I've worked much of my career in assisting entrepreneurs in both raising capital as a licensed guy and now as a formerly licensed but micro VC operator. So for me, this, the blockchain is a solution. I saw that in the qualified, let's say, small balance investment banking area was going to die. Capital raising was going to move online. You guys are clearly the leaders of primary issuance moving online. And I was sitting at a National Investment Banking Association meeting several years ago and just thought, this is over. It's not going to happen like this anymore. And sure enough, it's happening. Shortly thereafter, we saw this craze in ICOs, and what was astounding to me was the amount of money that was raised in such a short period of time by these companies. And I thought, it is time. Like, the world is ready for a digital transaction. And we are seeking at 10XTS to not only help issuers and primary issuances of securities, but also in secondary markets to really look at capital markets infrastructure as a whole. FinTech is fantastic, lots of innovation, but actually having exchanges and ATSs and broker dealers and investment banks working together for a pure digital transaction or blockchain based transaction, something that we still have yet to see in a seamless manner.
Yeah, definitely. All right, Congressman, coming back to you, one of the things I've found at DealMaker, right, when we convert people to a new way of doing things or thinking about doing something a new way, they don't understand the risks and cost of the existing financial system. They always forget this when they're trying to understand a new system. So are there any risks that you think are cured by tokenization and bringing securities online, or how do you think about that?
Yeah, I mean, I think you're right. I mean, human nature changes hard. Some people deal with it better than others. Some people don't deal with it very well at all. Congress deals with it very slowly. So it's been frustrating to people that are better at change, super innovative. America thrives. I mean, you look, 5% of the world's population, about 25% of the world's GDP, but over 50% of the capital markets. We have massive capital markets. And if you look in tech, and combine that with the financial sector, obviously Silicon Valley and, Austin, Boston, and, now Miami and Nashville joining the fray in terms of this space. Lots of other parts of America 10XDS started in Cincinnati, I think, originally, and Ohio's got Cincinnati, Columbus, Cleveland, and all kinds of small places trying to compete for it as well. So how do you move everyone else along in it? Kind of the same, slowly at first, and then all of a sudden you go back to the internet, and people. I remember when I first heard of Yahoo, I thought they were talking about the chocolate milk that I saw in the freezer section, and it was, why is everybody talking about Yahoo? And it's like, no, it's a search engine. I'm like, okay, why would I need this? And so I knew of GopherNet, but I hadn't yet heard of Yahoo. And so I think eventually people will see it, but the people that are starting to use it get the use cases, just like I did in business. I needed to solve a problem, and this solved it. If you look at small business, small retailers, they're looking at the fees that go to Visa and MasterCard and Discover, American Express, and they like the idea that they're going to spend less money for the same retail price. That's margin that can go to them instead of the payment processors. If you look at El Salvador, they recognize Bitcoin as legal tender, and they say the people of El Salvador will save nearly $500 million in remittance fees. Now, remittances from foreign countries back into El Salvador is officially one of the largest, I think the second largest component of El Salvador's GDP. So you think about how much that means for the people of El Salvador in the country, and for the people outside of El Salvador that are working, they'll be able to keep more money instead of, say, Western Union, for example. So I think as people start seeing the problems, they'll do it. And the next things that are going to be disrupted, whether that's how you do bond underwriting or how you price securities. We dealt with securities pretty directly with, if you go back to Robinhood and, the GameStop, short squeeze that was going on, real-time settlement and versus trading day +2. And now they're talking about moving to trading day +1, but real-time would be phenomenal. There'll be a blockchain-enabled securities exchange where the shares are settled real-time on a blockchain. And, people will choose to list on that as a feature versus listing on NASDAQ or the New York Stock Exchange or whatever. So I think people are just going to see problems and keep solving them, and that's going to inspire other people to do the same. I mean, look how far we are into the internet age, and we haven't even tapped all the use cases.
Yeah, absolutely. And so help our listeners understand, where is Congress in on this? Where is the SEC on this? How far away are we from something concrete?
Yeah, so good question. So, Gary Gensler is now the chairman of the SEC. And, when he was at the CFTC, which regulates commodities instead of securities, lots of things looked like commodities. Now that he's over at the Securities and Exchange Commission, lots of things look like securities. Unfortunate, because I think Gary Gensler was a guy who could be transformative. I think right now people have given up some of the hope for action by the regulators, and they're saying Congress really does have to act. The president's working group picked up stable coins, and so a lot of the use case, the utility function that Bitcoin had kind of has been, I won't say undermined, but been tested by traders. So there's, the hodlers, hold on for dear lifers, people that believe in the use case, store of value, means of exchange functionality of Bitcoin have been a little disrupted because so many people trade it and the market moves. It's been a little more volatile. So that inspired stable coins that are truly, in the best case scenario, New York trust companies that have audits, financial disclosure, full reporting requirements, well within the framework of law. Things like stable coins, you can use the use case. And I think when the president's working group came out with a paper basically saying Congress needs to take action on this, and I think that's the most likely thing. You may see a stable coin regulation coming through Congress, in the first part of 2022. And then from there, what consensus does that develop? And if you look at the hearing that happened in the House versus the hearing in the Senate. The Senate isn't yet as far along as the House. And Elizabeth Warren, I think, willfully used Tether to try to taint all stable coins. And the reality is Tether isn't very well regulated. And a lot of people really do look at it as essentially a security, a money market fund that's been tokenized in a lot of ways, versus the things that are more regulated that are working with, in the case of, two or three of the bigger ones, New York, the state of New York, to do it. And if Congress takes the president's working group too literally, we would only have federal charters. But the states are already pushing back, Wyoming most aggressively, because they've already got state chartered institutions. New York has state chartered institutions, just like we have state chartered banks and money service businesses. I think we're going to have a framework that makes it clear stable coins aren't securities, and stable coins aren't going to be treated that way. The question is, what are the next implications? But I think the first step will be getting clarity on stable coins.
Right. Okay. Got it. And Michael, what do you see what's your opinion on the major obstacles? Is it time? Are there certain parties that need to adopt? Does the tech need to evolve more?
Yeah, so we took the approach that we're applying the underlying technology to that which is already recognized as a security. So there's no question as to whether or not the particular types of tokens that we work with are in some fashion, not meeting the Howey test of the Supreme Court case that determines whether something's a security or not. We saw the opportunity to really streamline and bring incredible efficiencies to the market infrastructure, not only for primary issuance and how that gets listed onto exchanges initially after an offering, but then how to really seamlessly achieve that T+0 settlement that Congressman Davidson referred to. The technology exists already, and it's only the obstacle ultimately is the legacy, call it the monolithic institution, because it is really truly one that represents the bulk of the trillions of dollars of post secondary market trade when someone buys and sells a security on that secondary market exchange. That process that has to be undertaken to settle that transaction and ultimately transfer the title and the ownership of that security to someone else. It's currently represented by monolithic institution. I don't know how it escapes antitrust at this point. I'd leave that to folks like Congressman Davidson to examine those issues. But quite frankly, the technology exists now. There are licensed intermediary entities in the actual security capital markets that are blockchain native at every layer. Broker dealers, investment banks, transfer agents, trading exchanges, and ATS networks. But they're looking to replace the underlying operations and the chassis of the technology that it works on with a truly blockchain native programmable type of security. And it already exists. So the timeline is really now scale. And that's where we see the growth opportunity with great partners like DealMaker. We chose DealMaker because we believe that they are best in breed of automation of the investor automation and subscription process for a primary offering on a global multi-jurisdictional basis. And we see that as being really a great starting point. We didn't set out to build an offering automation solution. That's not our approach. Our approach is how do we help facilitate the on-ramp of those securities into a blockchain-based network environment that adheres the governance, risk, compliance, examination, regulatory at a mathematically provable level, because it is blockchain and encryption. So it's here. It's not future, it's now.
Yeah, absolutely. Troy, are there any key triggers that you saw happen that bring it forward, or any other key triggers you can think of that'll cause that transition from early adoption to like total market dominance?
I don't know what a trigger I would say, but I think law firms adopting and educating themselves on blockchain technology integrated with securities issuance is going to be a necessity. We spend a lot of time with law firms, just taking our approach, which was, the playground is defined. We know what the securities laws are. We just operate within those. So for us, if it's a Reg A plus or any other type of, formalized securities registration or exemption, we work within the law. And I think as the law firms understand the process of digitizing or tokenizing a security and becoming comfortable with the fact that a representative interest in a security could be, a share of stock, but that share of stock could also be represented in token form, and how they access that. I think that's one of the major triggers. So I think law firms, investment banks, who are doing, again, primary issuances of securities, and other capital markets participants, just it's a general education curve, and I think that's where we're at today. And we're seeking to educate those institutions, and I think we are seeing a lot of really progressive action by some law firms, some of the regulators, Wyoming especially, as Congressman Davidson mentioned. So I think, as people continue to learn and understand, there's nothing to fear in blockchain when it comes to securities perspective, right? We've been issuing stock and other forms of securities for many, many years. This is just keeping that in a separate records repository, if you will. So it's really not that different, but it is going to be fundamentally transformative. We envision a T+0 settlement. And I read an article recently saying most under age 40 individuals today would rather trade a tokenized form of an Apple stock or a tokenized form of a Tesla stock, right? They want instant settlement. And I think that we have the capability today to provide that to them. And I just, not to be long-winded, but the last thing you asked about a trigger, I think having some set of standards where all exchanges and custodians and ATSs can trust that each token is embedded with the proper governance and compliance, that would be fantastic.
Absolutely. I totally agree with you on that. Congressman, you're live from a local school right now. Troy touched on education in law firms. What do you think about ensuring financial literacy on blockchain in educational programs?
Look, great news. Ohio just passed a financial literacy law this year. It doesn't specifically call out blockchain to my knowledge, but I've long believed that you shouldn't be able to graduate without being able to understand the time value of money. Knowing what a gerund is probably useful. Being able to do some of the basic trigonometry is probably useful. But one thing that will definitely shape everybody's life is the time value of money equation, whether you're trying to earn interest or trying to fight off somebody else who's earning interest as you're repaying a debt. It is one of the most important pieces of math in existence. Obviously, there's more to it than that. I mean, fundamentally, we're dealing with people that are still grasping positive and negative numbers. So it's good to get the financial literacy component out there, and it's always exciting to come to a school like I am today and talk to students. I think I'll be about the only thing between them and Christmas break. So I don't know how attentive they'll be.
Yeah, but we do what we can do. And Troy, as education of the younger generation happens, how do you think that changes the future of DeFi? So for those in the audience that may not know, DeFi is decentralized finance. So financial products without an intermediary. Like if I, Rebecca, CEO of DealMaker, need to go out and get a loan, I can get that peer-to-peer and not have an intermediary institution.
Yeah, I think talking about the education curve, in that case, again, I think the more mature individuals in capital markets are the ones that, again, have to be educated. The youth have no problem with the education process. I have a 15-year-old boy who is learning at a much more rapid rate than I am about DeFi. I can barely keep up. But I would say as institutions do adopt, let's say this, comfort level with blockchain-based solutions, the integration possibilities are going to continue to open up brand new ideas, brand new capabilities. DeFi today is a massive industry, but I think in no way is it even beginning to represent the behemoth that it will be in the future. I could reference a Gartner study from 2018 that said, in the next 10 years, I believe it is, and Mike, you could help me out on the exact quote, but they said that 80% of legacy financial institutions will be out of business or former shells of themselves, if you will. And I may have the languaging a little bit different. But the reality is financial markets are changing. DeFi is radically changing things. And as Mike has so said to, some local community bankers associations recently, there are not a lot of individuals under the age of 40 that can appreciate walking into a bank and seeing a 2% CD or things of that sort today, when DeFi is an obvious, alternative, and you don't have to go anywhere. It's accessible immediately, and it's not going away. So back to education, I think the youth have it. It's educating the more mature in the industry, and we're seeing a lot of smart young people and a lot of smart young attorneys and those coming up. So that's how we'll grow.
Yeah, absolutely. And like on that point, literally yesterday, I met with a German bank who's very deep in this space. They're setting up subsidiaries in Canada and South America right now before the United States. So like, Congressman, like, are people aware of this? Like, what's your thought in this industry going around the United States?
I'm encouraged that many of my colleagues are finally catching on to the fact that there are really good use cases launching outside the United States, and while there's political rhetoric that people posture on, my colleagues across the political spectrum were wise to the fact that companies were essentially moving their headquarters offshore or being bought by foreign companies, which drove some of the tax reform. Now, at the individual level, there's differences, and that's really what gets politicized for the most part. But corporate taxes have been a challenge for the United States. We had to get more competitive, and corporate regulation is a big factor. So in this case, unlike some of the other regulatory practices in the U.S., like say, people aren't just leaving the United States to avoid America's environmental regulations, for example, which happened in manufacturing for a time. And in this case, they're leaving the United States to find countries that have already provided clarity that America has not provided. So a handful of places are leaving places that provided a lot of regulation, like BitLicense in New York, for places that have less regulation. But on balance, at the federal level, the problem is we haven't provided clarity. And I think that you see the momentum building towards us doing that.
Yeah. Michael, what do you think are some of the long-term benefits of adoption? Like, you hear talk about increased banking for the unbanked.
Yeah, I mean, I think we've seen a chapter in finance and capital markets where the industry as a whole has been consolidated upward into, some pretty sizable institutions, and it comes back to the balance between regulatory and call it the consolidation and even the antitrust. There's never a single monopoly created that the government wasn't involved in some capacity from a regulatory standpoint. And what that has done is that's extracted a lot of wealth out of Main Street and communities on a distributed basis. For example, when you agree at the polls to pass a municipal bond issue to pay for a new school gymnasium, for example, the taxes that you pay on that bond leave the community because those bonds are aggregated and consolidated upwards into Wall Street. So literally the current market structure favors that centralization approach, and the technology is all about decentralization. That's the fundamental nature of blockchain technology. I personally love community banks. While the kids may not appreciate going in and having a meeting with the bank manager or the president, I certainly do. And the benefits of having that are obvious, always have been. It's when we lose that ability to access those wealth generating opportunities, whether that's through, redefinition of accredited investor certification to allow more people to participate in earlier stage financings and fundings where the real money is created, the real value is created, or whether it's just simply bringing efficiency to the process by which your municipal government can access, capital from the markets. There's just so many untouched use cases, and it's an exciting time for us to be in the epicenter of it, because I believe that our approach that we've taken hasn't been a product of that polarization of compliance versus anti-compliance, and let's decentralize the government while we're at it, right? But we try to find a workable balance, because we still live in the real world, and I believe that just as the internet changed a lot, and it did change a lot quickly, but then it's continued to have that incremental improvement and change as the use cases continue to be discovered, as Congressman Davidson indicated.
Yeah. So one recent use case that caught a lot of press was the constitutional DAO, and Congressman Davidson, I'm interested in what you think that signifies for the space. For those of you that don't know, a DAO is a decentralized autonomous organization, and that means people can invest and then immediately trade their interests. So that DAO raised over $40 million to buy an early copy of the Constitution that was being auctioned by Sotheby's.
Yeah, and the founder of Citadel Capital outbid them. So, which to close that loop, payment for order flow, one of the big players in that is Citadel Trading, not necessarily the fund. It's a separate entity, but related entity. So there's a lot of money in finance. I think there will always be a lot of money in finance, and because of that, there's been a lot of innovation. And I think you're going to see DAOs kind of test the bounds. In our current legal framework, everything's account based. Even when you create a company, there was a law that I wasn't a huge fan of that requires all business owners to file a form with the federal government to disclose who are the beneficial owners of the company. And this is really just to be able to monitor, ostensibly anyway, just to be able to make sure that we've tied identity. So there are identity tokens. So identity may be able to be tokenized in a way, but with no one's identity tied to anything, DAOs are going to test the bounds of what functioning societies can accept. It's very popular with the whole self-sovereign side, but I think governments around the world are going to probably be united in saying, we have to be able to tie an identity to somebody. We have to be able to hold someone accountable for compliance, conformance to laws, fraud. Who do we charge with fraud if a DAO committed the fraud? So if a DAO gets functioning on a network, how do you shut it down? Classes are changing again, I think. And that highlights, I am supposed to speak to this next group. So that's probably the last thing I can answer, but I hope my comments were helpful. But I do think DAOs are going to test the bounds of even what, unless you're actually an anarchist, people that are I'm a Republican, not an anarchist. So people are going to say, we have to have some identity tied to it.
Yeah, absolutely. Well, thanks, Congressman. Troy, I'll jump to you. Any comments on DAO or the constitutional DAO?
I think the DAO concept and continued, use cases are phenomenal. I think governing by a consensus is something that's happened for us with the representative republic in the U.S. Since our founding, and I think it works well. And I don't think beyond that, I would like to see clarity around DAO, and I know that Wyoming has been progressive in establishing a framework of DAO legislation, and there's still a lot of unknowns, as Congressman was saying. But I think in the near future, we'll see that becoming more common, and simply because a governance by consensus seems to work in everybody's benefit. So.
Yeah, there is definitely that. The other thing that we've seen, right, doing the Green Bay Packers deal on DealMaker right now, is there is this concept of ownership for the sake of ownership. And it ties in with a lot of what Michael was talking about, access for different types of people to ownership. But for a lot of people, that's a new concept that's very exciting for them.
Absolutely.
So we're just about at time to wrap it up. Michael, do you want to leave us with any final thoughts on NFTs or DAOs or future products that excite you about the space?
It's such a great time to be alive. I mean, quite honestly, it's really exciting. This is going to be as or even more of a transformation as the internet itself, and it's happening faster because we now have the internet already to exchange ideas and information and concepts. I'm so heads down into disrupting the market infrastructure of capital markets, which spins into so many other areas like governance, risk, compliance. I think ultimately the judiciary will be impacted by all of this, as digital securities become material to a court matter. And then how does that information? So you're pushing upstream so many innovations and transformations in so many different ways. Smart contracts. The legal community right now is scratching their heads like, does this mean we're out of a job? And so there's a lot of just a rethinking of how some of these monolithic socioeconomic architectures really work. And it's exciting. I'm a little later in my career, but I think that the young folks coming up are really going to have an exciting time, fraught with a lot of risk, thoughtful regulation and legislation. I spend a lot of time with Congressman Davidson in discussions about policy and among others, and really just trying to make that ripple as we work together to transform these markets.
Yeah, absolutely. Just before we sign off, are there any questions from the audience that we can get an answer for you from Michael or Troy? All right. Thanks, everyone. Well, thanks for taking the time to attend. I'm excited to see what develops in this space. We've got a bunch of mutual clients moving forward with tokenization. And I think the next 6 months are going to be pretty pivotal to see what happens as we develop the technology out with those clients. So we'll have to come back and do this again. Thanks, Michael and Troy, for your time. And thanks to everyone for attending. If you have any questions or you want to get in touch, you can send an email to info@dealmaker.tech.
Yep. Thanks, Rebecca. Appreciate it.
Thank you.
Yeah, thank you, Rebecca. Talk soon. Thank you, everybody.